All right, so we'll start off here with slide 1, and I'll get the recording going. All right, well, welcome everybody to Wednesday's Pro Trader webinar. Today we have Thor. We've had Thor once before from Bearish Bulls Traders, and he's a trader over there. How long have you been trading over there, Thor? It's been like 5-6 years or so, or something?
Since 2018, actually.
2018.
Yeah. Okay. So however many years that is, math not strong, but it's been something like that.
Yeah. So looking forward to, he's got some great examples. We were just talking about it. So looking forward to seeing those. And then let's go through a few different elements here, though. First, that we're having a sale at the moment. And if you're interested in getting Bookmap, you've got a few days extra here until July 11th. For our 4th of July sale, it's 50% off Bookmap Global Plus and data. Just go to bookmap.com and you'll see it there, or you can use your phone and take a screenshot here with the QR code for more information. All right, and then I'm just going to turn it over to Thor and let him, he's going to be a lot more descriptive than I am, going through his bio here and why you should be listening to Thor.
Excellent. Absolutely. Thank you so much, Bruce, and thank you for the introduction. I'll actually run through a slight introduction in my presentation. So I'll finish out the formalities here, obviously, and I'll close out with a little my intro as well. We do have a promo code going on over at our community as well, which they were nice enough to share. But if you want to find me on social media, I'm here. I'm also on Instagram at ThorYoungBBT. You can always find me there. Before I get started, it is important to give a couple of general disclosures. So first thing, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure is trading futures, equities, and digital currencies involves substantial risk of loss, and it is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so we got through that, everybody, so we can escape off of that and we'll get this going. And I want to talk a little bit about one of my favorite subjects. So when I got asked by Bruce to do this particular one, he wanted to talk about how I'm using the order book in order to have enhanced trading outcomes. So I feel like in order to do that, I should really talk to you a little bit more about what creates these things in the background. I think a lot of us understand their orders and all these things, but maybe we don't understand how these things are coming to fruition and how they work. So as we go through this presentation, I'm really hoping to elevate everyone in here's overall general understanding of how the actual market works. As a person who has been to the New York Stock Exchange a half a dozen times and have lots of friends that are currently active market makers, as well as ones that are current brokers and people who still go to the market and regularly and do these things, I have the fortunate to have some of this inside knowledge here that I'm going to try and bring to you today. And these are the kind of things that really helped me. Now, I got into this, believe it or not, because of Bookmap. I started using Bookmap a really long time ago. I mean, it's been, maybe 5 years since I've started using this actual program. It's come a long way too. The different tools that they're offering you now, the ability to take trades through it, all wild things, right? It's really quite spectacular. But inevitably, what I learned from being around market makers in the market is visualizing the market and understanding where it's incentivized to move is really the best way to, figure out directionality as a whole. So real quick, just to tell you about me, just to give you a little bona fide so as we move through, I am a day trader, educator, and speaker, and I have a unique background that bridges these varied things. I've been in the IT industry for well over a decade, which included working on server systems for options trading platforms. Right? I have been day trading since 2018. Right after reading How to Day Trade for a Living by my boss, Dr. Andrew Aziz, over in the community. Great guy, inspirational guy, and always a good way to learn some strategies that you can augment into Bookmap. Right, Bookmap gives you where it's going to be at, so these strategies can help you figure out how to interact with it. Right, I also use my own particular strategy that's in my book, A Complete Day Trading System. And I've been using that same exact trading system since 2020 to 2021. Right, so I do stock trading mentor. I've worked with over hundreds of traders, and I am the senior futures trader at both Peak Capital and Bear Bull Traders. Okay, woo! Now that I've talked about me, my goodness, this is what I'm going to try and cover here. I did ask Bruce if he'd be mad at me if I ran over an hour, and he said only a little bit. They're only going to revoke my membership, but they're not going to kick me out. So that's good news. So first off, I want to talk a little bit about the level 2, right? So in the 1990s, right, larger spreads forced tape readers to abandon simple tickers, and they needed to start focusing their attention on market depth screens. This was a really big adjustment that happened, right? Prior to this, right, even with the computered age, we were mostly just reading price movement off of tapes, right, and tickers. We weren't really concerned about where the order volume really was. We just would find it when we found it. Right, but since spreads started getting bigger, movement started getting faster, we started getting more listed tickers, it became too difficult, especially for our specialists, right, to be able to maintain and keep an eye on these kind of things. So through this revolution, market structure, utilizing the book, tape readers found an obvious edge over other participants. This market skill allows proponents to measure the emotional intensity of participants while they uncover the day's leaders and laggards. So what do I mean by that, right? We're going to talk about how to identify a bullish book or a bearish book, right? Is the market sentiment strong or is it weak? You can tell that just by looking at your order book, right? I want to introduce you to this guy here. This was from the first time I went to the NYSE, and there was a little bit more there of me, bigger suit, and, apparently being a stock trader made the rest of my hair fall out. So, what are we going to do? But you can see here that, in the background is the stock exchange floor. You can see the gold ceilings. You can see the teak floors. You can see the marble walls, right? It's the fancy place, right? All the things are here. Tuckman's probably down back over in his desk, which is right over here. These two front desks here are Citadel Securities, right? These are where our specialists are, right? And where they reside. Another, just to say hi to him, that guy. Anybody ever meet that guy? He's the we call him the Einstein of Wall Street. He's he's become a fair buddy of mine, especially his son, and he's one of the reasons why I've been able to kind of gain access into the kind of the knowledge that I have, and it's always super fun to hang out with him. So a lot of the times when you're looking to trade, you're going to have a really big issue with your trading, and that's because you're going to trade patterns. Right? This is one of the reasons why I'm going to start off talking to you about how the order book visualization really helps with your trading. Right? Patterns, ICT concepts, anything, key levels, highs, lows, pre-market, whatever, all of these things are just lines in the sand. Right? They have no significance if they're not applied correctly. And by looking at Bookmap and by reading and visualizing the order book, you can see where we're running out of orders, which level that you're targeting actually has the big order sitting at it, right? Which order you're targeting has no orders below it. Maybe you're trying to go for a target, but that target has no chance of being filled, right? Because of that, right? So these big orders and everything that's out there is being generated by mostly institutional orders. Right? So when we talk about who are they, right, we need to talk about and we need to understand the varied components within the market, right? Who are you, right? You're a retail trader, right? How high on the totem pole of the grand scheme? I bet very few of you maybe even completely understand the actual hierarchy of the market itself, right? We're retail traders. Right? There is a lower level than us, right? Which is 401k mom and pop style, right? But in reality, they're actually more in line with the institutional side of things. We are the bottom of the barrel when it comes to the investment world, right? We're, lack of a better word, gamblers, right? We're people who are coming into the stock market. We're trying to make some pretty generalized ideas on quick price movement, and we're looking to take advantage of a movement within a specific time frame, a day, maybe even shorter, right? We're not really doing anything. Now, we do provide additional liquidity, and we allow them to move between these institutional orders. And I'm going to show you how to recognize the latter here shortly, and how to tell the difference between when there's institutional orders versus institutional orders we can actually move through, right? So they are, right, above us in this pecking order, right? So we are institutional, or we are retail traders. Above us, we have the thing that all these ICT and all these stuff, we call them smart money, right? Smart money isn't really smart money. Smart money, that concept is being renamed, and generically across the exchange, we call them pro-tail, right? So we have retail, which is you and me, because our bank accounts are like this big, right? But then we have people that are doing the same exact thing we're doing, right? But they're doing it with very, very large bank accounts. And that's pro-tail, and that's who they're really interested in. When your highs are getting swept, when your lows are getting swept, when they're coming up and hitting an order to try and generate extra volume, they're not after you, although it feels like it. They're after that really big account that's doing the same thing you're doing, right? So this is why it's really, really good to wait for volume, right? When you see these sweeps happen, when you see us run in and you combine these order book movements with volume, you get a lot of keys of when you're hitting these. So now that we're isolating pro-tail, who's above pro-tail? These are our institutions, right? Institutions are the largest generator of traffic in the market at about 70-ish%, 60 to 70% overall traffic, right? The rest, props, hedges, pro-tail, retail, right? And specialist movement outside. Right, so now when I'm talking about that, we're talking MOO orders and MOC orders. I'm sure many of you are familiar with this. I can't, we don't really have like an active chat going, so I'm going to do some questions at the end maybe. Right, so, but what we have here with MOO orders and MOC orders are market on open and market on close orders. Anytime you sit down, right, to with your broker on the phone, and you say, hey, I want to sell like 1,000 shares worth of Apple. That'd be a lot of Apple. Let's say it's more like or 100 shares of Apple. I want to sell this out of my 401k, right? They don't go right onto a thing and execute that immediately in the exchange unless you ask for it. If you want it immediately, they can do it. It's going to cost you extra money, but most people don't care, right? They just say sell it, and then they sell it the next day, or they buy it the next day. Right? Those orders happen across all the major institutions every single day. Royal Bank of Canada, right? Bank of America, Merrill Lynch, right? All of the, interactive brokers, right? All of the varied places where your investment dollars are getting put into, those MOO orders are being stored on their server for the open every single morning. Right, and then so when we open at 9:30, that first opening candle you're getting is MOO orders. They're market on open orders that are being fired by the institutions, people who just want to sell. Right, it's just getting it done. Right, we have MOC orders, which is the same thing, but for everyone who said I want to do it and I want to do it today, they fire into the close. Right, so by recognizing and understanding who's driving traffic, this is a really easy way to understand what's going on Bookmap. Now, above all those institutions, there's one more trader, and he may be someone you don't recognize, right? You would think of them as a market maker, but the market maker is nobody special, right? You think of a market maker, which is this guy right here, really nice guy, one of my buddies down there. He's a market maker for Citadel Securities. You can see above his head, he's got about, 50 tickers that he's working. Right? So he's a really sweet guy. Really fun hanging out with him. He's number 2530. I think it's 33. Oh, I can't even see it. It's like 2533, I think. He's a really awesome guy, and he's a NYSE market maker. Right? This guy is a trader just like you are. I know you think he's some, like the Wizard of Oz or something, like he's some crazy man behind a curtain. He's not. He's a trader just like you are. He has an account that has a certain amount of money in it, and he's trying to facilitate trade between these large areas of interest. Right? When we're buying and we're selling and we're moving, sometimes it's us. A lot of the times it's them. Right? If the market maker knows that they need to buy a really large order, They will buy all the way through that block, wait for more orders to come into the downside, and then sell down into that block, right? Market makers don't care about the transactional movement of price. They care about money on comms, right? A market maker makes money by being the in-between, right? In this market, there is no for sale by owner, right? If you've done real estate, right, you can list through a broker, right? Or you can for sale by owner, right? In theory, I don't know if anyone really does it, but you can do it, right? So there is no for sale by owner in this stock market right now, right? When you're trading on the NYSE, you're always going through a market maker, and that market maker is generically dedicated to that particular security, right? If you're trading like, some, obscure like UNH or something like that, there's probably one principal market maker who's in charge of facilitating the vast majority of the price movement for that ticker. There's people who want to buy it. There's people who want to sell it. It's his job to get the price up and down between those things, right? The market maker has been assigned to that company by the NYSE, right? That company actually has a phone that they can dial right into there. CEO, CFO, and the investor relations person for that company have a direct line. If the market starts selling too hot, that market maker will get a phone call. What's going on with my ticker? Oh, the current president just came out and said he hated oil, and and you have a logistics company. So sorry, it's going down right now. Right? So boom, we're going down. But that person has that direct line. But also, this is where our insider stuff kind of can happen, right? Investor relations person says, hey, we're going to work on doing a split deal in like a month. We need more shares, right? This is kind of a thing that's going on, right? So, but market makers get paid the same way that ATMs get paid, right? And we'll talk a little bit about that with looking at the book versus like a balanced versus a bearish one. But if you've got all the transactional potential in the world, you're not going to go anywhere. This is why if your order book's very full in both directions, you don't take a trade yet, right? You need an imbalanced book to move, right? Because you need the market makers to steer towards the transactional opportunity, right? How do they steer towards that transactional opportunity? It's algorithms. Algorithms do it all now, right? So with hanging out on the market, when you walk down to the NYSE, one of the things that's crazy about being there is it is quiet, folks. When you go down to the NYSE floor and you're walking around the NYSE floor, you've seen Trading Places, you've seen all these fun movies from the 90s. It's not like that anymore. They call it the law of attrition, right? So because of all of these algorithms have come in and taken the seats of these specialists, one specialist can now, it used to be one specialist or two specialists for 3 to 5 tickers. Now one specialist can easily manage 50 to maybe even 100 tickers. Right, because the algorithm does the vast majority of the heavy lifting. But understand that the algorithm does the vast majority of the system, right? Whenever we're doing trading, you need to understand that this thing's on autopilot. Big Tony, who's one of my market maker friends, I didn't picture him here, but I should have. Used to play for Penn State, and he has this this whole. That's why we call him Big Tony. And he used to have this whole thing going on there where he talks about the general concept of a market maker is basically like an airline pilot, right? And a market maker is, an airline pilot flies the plane, you ride in the plane, right? The airplane pilot doesn't fly you anywhere, right? He just flies the plane, you're on the plane, right? The market maker doesn't really move the price. The market maker never moves the price. The algorithm is always moving the price. It's the plane. Right. So, but the market maker at times can take control of the algorithm. Right. So generically, kind of like a pilot, right? When's a pilot take control? Taxi, takeoff, landing, taxi back, and turbulence. Right. So as long as we're moving in a direction, this is why you don't need to take your positions off once you're in transition. Right. We're in autopilot. Unless a volume hits or the order book flips. Right, there's no reason to think we're not going to keep on moving, right? So algorithms control everything, right? So here's me sitting, I have a version of my trading system has been coded into TradingView. So this is kind of an instance in which you can see there's 2 pilots here, cheeky in the background. I'm actually sitting on my laptop here, and with the NQ opened here, came down, it made a new high, so I went ahead and went long. And then hit my target back at the high of day, right? How do I know how to do this, and how can I do this just using a systematic approach? Because it's algorithms, right? There's things that we're supposed to do and ways we're supposed to do it, right? I was sitting in an airport, right, getting ready to fly, and I made $1,000, right, on my, right there, and it took 5 minutes. Right. So, and it wasn't a thing. It wasn't complicated. The system that I have in place calls my trades when they're in the right location. So all I have to do is just get involved. If you follow me on Instagram, especially Thor Young BBT, you'll see I've got links to all of this stuff up in there. So there, but I'm sure we can get that. So how does the algorithm move the price? I'm country. I grew up on a farm out in the middle of nowhere, Woodruff, South Carolina, okay? So sometimes some of my analogies get real country on you. This is going to be one of them. The market makers move the price by jigging the participants of the market, and they utilize a very simple method, right? And once you're aware of this method, you can recognize it and not get jigged, right? When a market maker is trying to establish value or find participants, they're not going after the little fish, they're going after the big fish, but they find the big fish by finding the little fish. So keep this in mind. I wish I could, we could have a little participation, but I get it. For everyone out there, just keep in mind, imagine if you went to fishing and you were on a river and you're using a cast reel and you're just fishing. How do you know that you're in the right place, right, to get a big fish? You keep going till you get small bites. Right now, do you set the hook on small bites? Of course not, right? You're not after a small fish, right? You just keep getting the little ones until you get the big bite, the volume, and then you pull and you reel and you pull and you reel. This is the same way market makers' algorithm senses the dynamic of the market, right? It tests into areas of expected liquidity and then pulls and sees what happens when it comes out. Like a traditional auctioneer, you're just bidding down to the low. Once you find the low, you bid up as quickly as you possibly can. This is why we slam into bids and then yank away really quickly, right? It's really how they entice you. So here's an instance here where we're using Bookmap here, and you can actually see where they jigged the fish. Right, they actually came down and they sold through this. They came down and they pulled, and then they started moving up, and then this order went ahead and split and came up higher. Right, and you can see the precision of how algorithmic this is. It came up and we started pulling away. We then came back and retested, hit those orders, and then went on a rally and cleared this block to the top side. Right, so the algorithm, once you get used to watching it, like for instance, if you're watching the open, we get a big pop at the open, right? The big pop at the open tells you a lot. Those are our MOO orders, right? If we get a big, strong open, right, but we have a lot of volume, but a really narrow candle, that's not a strong open. That's a weak open, right? Or a neutral open. You know what I mean? It's not bearish engulfing. It's not bullish engulfing. You know what I mean? It's indecisive. If it sells and does a bearish engulfing, keep that in mind. Like they're telling you something when these comes through, right? With the knowledge that we've now kind of gone through here, we now know kind of why, right? Why we're moving in the direction we're moving in, right? We're incentivized by transactional potential. Therefore, we're going to move in a distance. I want you to think in your head as you're reading the order book. This is what always helps me the most. All right. Over time, with volume, price moves to size. Over time, with volume, price moves to size. Right now, with volume, right? So if the order book is stacked to the top side, but you don't have buying volume, you're not going to go up it, right? But if the book is stacked to the top side and buying volume comes in, you are going to go up it, right? Now, if the if selling volume comes in and your order book is bullish, it's not going to sell. There's no orders down there. Not that it can't sell, but any selling there is going to be manipulative at best. Right, we're just going to dip into the empty book, and then the algorithm's going to bring it right back up, right? Because there's no order potential there, right? So this is why we watch the volume, because over time, with volume, price moves to size. Once you get into this, you can start timing entries better and exits better, and I'm going to show you a little bit of that here shortly. So I wanted to go old school here for a second, just to show you how we used to do it. Back before Bookmap came in and showed us all this amazingness. right? We used to use a DOM like this, a level 2, and we would use like an order highlight feature, basically, that allows us to still see orders. It's not historical. It comes on and off really fast. It's really hard to spot, and it's really difficult to read, right? But for those of us who got used to it, it became an incremental tool in our ability. You can see on this particular level 2 right here, which I don't know how many of you remember PLTR at $15, but here it is. You have an order book to the downside here that's quite weighted, right? So the expectation, if we get selling volume, would be to move downwards. If you were looking for a long, I would tell you not to long this stock. Is it a short? I don't know that yet. But if we get selling volume, it will sell, right? So you don't want a long because there's virtually no chance a book like this is going to become a long. Now, I talked to you about that ATM analogy. That's what this is. Right, if you have a book that's evenly dispersed in both directions, so you're looking at Bookmap and you have a very similar dispersion of bid, right, to the dispersion of ask to the top side, and you're sitting in the middle, this is high chop, right? This is a balanced order book that's going to have a significant amount of trouble taking any kind of major directional movement, right? And it's very, very important that you get directional movement, right? I mean, I'm pretty sure we all need the price to move. So just by looking at the order book, you can actually tell that there are too many orders in both directions. This ticker is not imbalanced enough. It doesn't have enough excess on the book in one direction for me to see the potential transactionally. So you would not trade books that look like this. So if you're looking at Bookmap and you have that order book that's like that in Bookmap, again, that's kind of the thing we're gonna want to look for. If your order book is too balanced, if you're in between two blocks, let it buy the top block and then sell towards the bottom block, right? So you can see here kind of Apple from quite a while ago. You can see the bullish block here, right? Here's PLTR again, bearish, right? So we talk about icebergs. Bookmap, especially for futures, has this pretty legit iceberg detector, which is pretty cool. You can, if you get skilled at it enough, you can see icebergs and learn to read them. For those of you who are unfamiliar with the term iceberg, an iceberg order is an order where where the institution that is putting out the order is intentionally keeping size off the book, right? So we have a very large order that's being put on, right? Let's say 1 million shares, for instance, of a particular ticker. Every time we go up and we hit that, we pull back, we look back up, there's still 1 million shares there. Right, you can use programs even like DOS Trader Pro, for instance, right, has the ability to set in iceberg orders. You can say, I want 40,000 shares and I want to get them 1,000 shares at a time and then put them to sell, right? There are the tools to do icebergs available even to retail traders, although quite pointless, right, because nobody cares about our size. If you were doing 400,000 shares at a particular level, sure, maybe. Maybe not a low float, but on a high cap, absolutely, right? Maybe you want to hide that size, because what's going to happen quite often is if you're putting that heavy size out, especially if there's not a demand for buying, right, it's going to stagnate the price and it's going to take too long to get up and transact the order. So inevitably the specialists involved, market makers, right, are going to retreat away from that large order because we don't have the volume, right? Over time with volume, price moves to size. Right, so this is what icebergs look like in Bookmap if you haven't spotted them before, but here is one now. You can see here at the beginning, right, we kind of distributed a little bit and then we started buying up through these orders, and you can see at this part we were quite bullish. All of our larger orders were the top side. We had very little orders to the downside, right, and as we moved up we did not start bringing in new orders to the downside as we moved up. So as I'm looking at this particular ticker, it looks incredibly bullish at this time. But then we hit something and we sell. And then we start to buy, but we drop. And if anybody kind of gets how this Bookmap thing works, the one thing that shouldn't happen is you shouldn't go down while you're buying. In order to go down while we're buying, that means the market maker or the specialist is specifically distributing into the buy activity, right? So that means as you're buying, all right, let me make sure everyone's got this, right? So when you buy from a market maker every single time. When you sell to a market maker every single time. So if a lot of buy orders start coming in, but the price isn't going up, where are those shares coming from? They're coming from the market maker. right? The market maker has been holding position and you're at premium, and they are now distributing premium into you. And that's why you're not going up anymore, right? So now that we're seeing this distribution of premium, we offer higher, and then whoever our specialist was that was involved in our institution here, they went ahead and threw their orders on, and that really kind of exposed to the market what was going on. Since we were already struggling to gain through this level, it only took a very small amount of selling to actually liquidate us around, and then look how the orders dropped off the top side as we started moving down. We're still buying, right? But we're moving down, right? Which is just showing you that the market maker is done. They have no intention of going up through those orders, right? And no matter how much anybody wants to buy, they're just going to be dumping right into that activity, right? So it's a lot. So the heat map, as I talked about before, is a DOM, right? Or a depth of market, right? The depth of market historically was a giant billboard on a wall. So just to give you a little history progression here, when we started out in the market back in the day, we had pits. Those pits had people just standing in them, holding tickets in the air and yelling, right? Then we evolved. We ended up getting boards. We ended up putting tickets on boards, right? People would walk up to the board, scratch their chin, grab this ticket, and then walk around and try and find the person who put it up there. That got inefficient. We then got a center desk, right? The pit now has a center desk. People come into the center desk, right? And they go up and say, hey, I'd like to buy something. I'd like to sell something. Guy at the center desk now had a billfold that he could go through, like a binder. He could go through and say, okay, well, this is your average cost for that, and hand it to it. That guy lost his job to specialists. Right around, shortly after that time period, it was realized that that process of facilitating trading was worth money, and it was worth big money. And that's when our big investors came in. That's when we started having a lot of mom and pops out there, like your Rockefeller types, right, started coming in and investing in the process of actually making markets rather than just participating in markets. And that was a big change in the early 1900s, and that's kind of the model we're still using today, right? So the DOM allows us to look at the bill, that I'm talking about, that 3-ring binder, right? The order book is that 3-ring binder, right? So now obviously you don't, maybe you're not subscribed to all the routes. Maybe you're missing ARCA, right? A lot of orders on ARCA depending on which listing you're looking at. Right, so, but maybe you've got DX feed. Now, I've heard something that DX feed is supposed to be bringing in ARCA through DX at some point. So, so there's certainly ways, that I think we're going to be able to get to more orders. But for the most part, no matter which routing method you have, it's going to be fine. You know what I mean? But it allows us to see very easy identifications of our historical level 2, where our orders were, where they are now. Are we buying? Are we selling? And that makes Bookmap uniquely special, right? Bookmap isn't special just because it's a DOM. It's a DOM with a tape on it, right? Your dots are a tape, right? They're letting you see all the market level buying and all the market level selling as we move through the limit orders. When you're looking at order flow, you can see it by how quickly or how fast your bubbles are growing and moving. Right, once you get used to watching Bookmap breathe, you know what I mean? It becomes very organic, and you can start to really see the, ironically enough, almost like the spirituality of the market. You can really see the fear and the greed in the market coming in. So here's what I would consider to be an obviously bullish level 2, right, or an order book on Bookmap. You can see here I was trading coin this particular day. You can see at 9:30 we opened, and as we opened, if all you did was made your decision based upon what this order book looked like, you would have went long and you would have made money, right? There was no indication as we moved up. They bought in almost no new orders to the downside until maybe right around here. You can see some kind of a trending algo started tiering in orders. Ooh, at the end of this presentation, make sure you stick around. I have some fun things for you with Bookmap that I don't think you'll see very often. We actually caught a trendline algo on Bookmap actually following its line down, and I just want to show you how it looks because it's so fun just to see the wizard behind the curtain when we do this stuff. So make sure you hang out. So I was talking about those dots, right? Those dots are amazing. And what they do is they show you where our market level activity is being applied. Remember, it's an algorithm, right? The algorithm's doing all the facilitation here, right? So what happened is we had a market order on the sell come through, and the algorithm decided to distribute that order into the bid lower. That means this stock is selling, right? Look at this right here. You can see we have two red dots that go down into the bid, and then this green dot. Notice what the green dot does not do. It doesn't lift the price, right? We pop up, we have a green dot that comes through, but we go nowhere, right? The specialist distributed into that buy order, right? There was no intention for them to go up. Once they distributed a little bit into that buy order, they went down and they cleared back into this order again. Again, we pop up, red order, bam, right? We're through the order. This ticker is selling. Right? If you can learn to read the levels and the way your dots are interacting with the levels, you could start to recognize accumulation and distribution patterns. Right? This is going to help your holds and help everything else go through. Right? So volume delta here is really what we're utilizing. Now, Bookmap does have has what they call blanked total volume, right? Which is where you get a split level volume. Looks kind of like a pie chart inside. I think that's also very valuable. I actually prefer, this kind, which is the, which is kind of gives you that cumulative volume delta concept, right? So I can see really at a particular time frame, did we have more selling or more buying, and how much volume was there? And I really do like that quite a bit, right? So when you're using these, being able to see this really helps you see absorption in the book. It's really, really useful. So here's an example of that total volume. Look here. So I want to talk to you a little bit about volume pressure, because right now what I'm talking to you about is the algorithm and how the algorithm works, right? So whenever the algorithm turns on and it starts and it offers right off the beginning of the day, the algorithm is basically holds its hand out, right? Whatever happens to the hand is what it does. So if it holds its hand out and it holds its hand out, buying comes in. If there's orders to the top side and the algorithm is already accumulated, it is going to take those orders and it's going to move them, those market orders, up into the ask above, right? So the market maker kind of think, again, on the real estate thing, there's no for sale by owner, right? So what you're going to do is you're going to pay, right, the ask, right? So you want to buy now. So you're going to pay the ask price, and you're going to get filled at the ask price. And then the market maker is going to move up to that level and then transact, right? That's why you get negative P&L as soon as you get into your market buy, right? Because you're going to buy in here, and then the algorithm's going to go up, boom, boom, and buy, and then come down and give that price. The algorithm is always responding to these requests. We have a buy come in, so it distributed. Another buy came in, it gave that buy, but then immediately dropped down and cleared that sell with it. Notice how the size of the dots are almost exactly the same, right? The algorithm, down to its very finite level, is actually offering and bidding very, very precisely, right? Unless we're moving and transitioning, so we're on autopilot, right? This thing is going to, if it gets a buy request, as soon as it gets a buy request, it's going to find a sell request of equal size and hit it, right? It's not looking to hold here. It starts accumulating and distributing when it thinks it's got something to do, right? It doesn't just randomly do it otherwise, right? So the volume pressure and seeing out how much buying is coming in versus how much movement we're allowed, this is what generates most of our volume and price analysis concepts in VPA. Right? So this really allows us to go. I wanted to show you here this example of an algorithm at work. Now, for all of us that were watching NQ as FOMC came out today, and ironically fairly bored with it, we have these moments where you can see where the algorithm and the specialists are actually pulling orders completely off the book. Right? In this instance, it's 8:30 in the morning and there was a news event coming out, and you can actually see our orders being removed from the book all the way. Right? Only an algorithm or a specialist algorithm has that many orders on the book, but keep that in mind. That's all one entity, right? All of those orders that are coming off at exactly the same time, that's a specialist algorithm, right? It's putting orders at every single level, all the way up and down, it's making a market, right? It's creating a ladder or a connective point in order to get from small orders or where we're at value to larger orders at premium or discount, right? But you can see in this instance with a news event pending, the algorithm played it safe. It pulled the orders off the book, and then when the news came in, it re-tiered them back on, right? So another example of what kind of buying that kind of looks like. So one of the things I want to talk about as we're transitioning towards, I'm going to show you some trades that I've taken on this thing, and as well as some other things here in a little bit, and talk about a couple more little things. One of the main things that visualizing the order book helps you with is better exits, right? Getting into a position generically is fairly easy. Where most of us are going to really crash and burn is on the exit, right? We either hold for too long, right? Or we don't hold long enough. We don't get our target, or we take too big of a loss. But if you can look at an order book and you see an order book that looks like this, you're not going to cut this position, right? The order book is incredibly bullish, right? And there's really no reason to get out of it. We've got more buying than we've selling, and we've got more ask on the book than bid on the book at the time, we would be getting long here. Now if you were going to get long and you were breaking out here, maybe you don't get long there because there's no connective material here and we're leaving orders behind. This book looks like it's getting ready to reverse, right? So, but down here, there's no indication of a reversal at all. So why exit partial or get out of a position? It's just not going to help you, right? But also because of that, we can time better entries. Right, if you're looking to go long here, you know that we had to buy through a large order block right here. You can see it on the book. So as we buy up and we fail, look for it to come back and hold that order block. If it does, which it does, look how we sold and it distributed. But we didn't move down. That was absorbed. We then immediately started rallying back up, and as we rallied up, they brought the rest of that iceberg on. We then bought that iceberg and kept on going. Right, so you can see because of Bookmap, right? This you would never see in a traditional Dahmer level 2, right? Because only in Bookmap you would be able to look back in time and say, last time we were here, there was a big order we had to buy. I want to see if we've got enough volume to sell through that level, and if not, that's where I'd be looking to buy. Right off of that low, you'd be long here, stop below it, and never get retested for the entire day. And you could get into a real day trade. Right, so when I say day trading, I mean day trading like swing trading, right? Day trading is more like swing trading. A lot of us call scalping day trading. Scalping you can do during the daytime, but scalping by methodology is scalping, right? Day trading is day trading. Day trading is generically where you're trying to get, 70 to 80% of the day's ATR in your trades. And I'm going to show you a little bit about that here in a little bit. I'm going to show you how kind of some of my holds work, which has been really nice. I want to talk a little bit about book flips. Right? Book flips are optical illusions a little bit, but there are some times when they are not, and this is one of those. So you can see as we were buying up, right, we had a lot of order density to the top side, but over time with volume, price moves to size, right? We had big orders to the top side, we had big green dots as we moved up. But we also have to recognize on this particular ticker, right, that we're leaving a whole lot of orders behind. Right, this whole area, as we're buying up through this whole order, we do have lots of orders behind, and to the top side, we are out of orders, right? So it does look like we've exhausted our buyers. That's the key there. Most people think we turn around because of sellers. We turn around because of buyers, right? When people stop buying, we reverse, right? There's always going to be more sellers. If we move higher, someone's going to be willing to sell once we get there, right? But the question is, do we have any more buyers that are willing to keep buying these highs? And so you can see here as we came back down, right, and then re-offered, that answer was no, right? We actually brought in more sellers right here at the price, and we brought in no new orders to the top side, right? So as we moved low through this small block, that triggered, and the algorithm aggressively started selling down the weak side of the book. Now, in contrast, this book was a book we thought maybe had a chance to reverse. Do we think this one will? No, we don't. And that's what we call, or at least I like to call, an order void. Right now that we've moved so fast and so far, there is no demand back to the top side, at least short term at all. Are there still some institutional orders being left? Yes, but retail is out, right? Retail and pro-tail have completely abandoned the process. We are out. We are gone. There are no more buying happening at this level, only selling. And the market maker allows all of these buys that have occurred to flood into it and help us move back down the book. And the market maker is just going to distribute anytime someone buys. So notice here, as the green dot hits, we move sideways. That's because the market maker distributed into the buyers. We come down here and hit, we moved sideways. That's because the market maker distributed into the buyers. Same here. That's the easiest way to tell if we're buying or selling, right? When we sell, do we move laterally or do we go down? When we buy, do we go up or do we move laterally, right? Once you can kind of read these, you can kind of see how these come through. So I promised you guys, as we're getting near kind of like my trade review section of this little guy, I wanted to show you guys kind of this little fun part here. So we were watching the NQ yesterday, and I thought it would be fun to show you guys this Trendline algorithm that hit. So we had a sell that hit, and immediately when that sell hit, it was a fairly decent manipulation. You can see how its stop order immediately came onto the book. I mean, it was pretty fun. And then as soon as that order came on, it started sticking stop orders, right, at increments as it went and did it. And then those orders actually followed down inside the book. So, but you can notice here, look, as we're hitting these lines, look how you can see these absorption events hitting as we hit these lines. And then right there, look at the cluster as we come back there. And then there's the all out. Pow. That's the last one. And then after that, notice how the block is gone. Right? So that's a black box, right, that we just caught. You know, kind of trying to be a little cheeky with us, right? So, but once you get used to seeing some of these things, here's one that just happened today, actually, that I threw in, right? You can see here, big manipulation, and we squeeze back and look at the hits. Tau. Look at where's going down the trend line. Here's another one, and then look as we hit it, the cover, and then the cover. Pretty wild, right? So I'm talking about these things are algos, right? So if you can use Bookmap and really dial this in, you can start to see where these algorithms are involved at. So like if I was in a position and I was short, guess where I would put my stop? I'd put it right above that and trail it, right? Why not? It seems like a pretty good idea at this point, right? So, but you can see even here, there was some kind of a trending line algo that came in here because you see we had a big sell right there. As soon as that sell happened, that sets the trail and it just starts following the price down and then it cuts right there. These are big shares, big contracts when we do this stuff, so it can really move the price. So, a couple of trades for you, because I wanted to show you how utilizing the order book enhances my specific trading, and I thought it would be easiest to do that by showing you trades. So, obviously I'm using Bookmap for visualization of the order book, and then you'll see me switching back and forth between TradingView or DOS Trading Pro for executions. So you can see here the CVD, which is our cumulative volume delta overall in the day, is red, right? And you can see that we have a very bearish order book, right? To the top side, very little orders. To the downside, very solid connection down into some big orders. Anytime we buy, we're absorbing. Anytime we sell, we're moving down. So we opened up on the Qs and we opened by moving upwards and got no volume response. So as soon as we went short, I hit with the MO orders and I went short and threw my stop above S4. Which is this is a S4 trending breakdown is what this play is for me, or sorry, counter trend, and it went short here and hit a profit target just afterwards. This is a trade that I took on Apple, and I took this trade today. I thought you may enjoy it. So I was always good to show up at a presentation with a fresh trade. So today was an R3 short for me on Apple. For those of you I talked about, my system is obviously in a book. It's also coded into the TradingView TradingView TV software. So you can download my system, and it actually does play calls and alerts and all kinds of stuff with it. So it's free. So I just like you to have cool stuff. So you can see here we squeeze up to R3 and offer R3. I get short. Now, this does expose a mental issue I have. The entire market was rallying like crazy. I do not know why I picked the only setup that was a short one. Sorry. No, it fit my system really well, and I'm really not concerned with market movement since I'm a day trader, right? I just trade ranges. So you can see here I traded from basically the high of the day all the way down to almost the low of the day and hit my profit target. Now I risk around $250 per trade, so this was a little over $1,000 on this trade. So you can see here, this trade was a little bit of a pain for me, right? AMD, when I first got into it, it was an S4 play. I really liked the order book on this one. As you can see to the top side here, there are very few orders to the top side. Also, we were selling on the NQ, but we had very few orders to the top side, and all of our density and ladder was to the downside. It felt like a great short, but it just was being a pain for me. But I stuck with this one because the order book really looked like it was going to give me a good target. So my first entry was a little wide, so I cut that at break even and then re-entered, and then that came and stopped me out, which was a little disappointing, but I re-entered and then hit my target shortly after. Here is a trade for those of you who like futures. This is a trade I took on gold. So we had a really bullish order book on gold. You could see orders coming out above, and you could see all the connectivity was to that. You could also see that we had more ask near the price and a slight imbalance of buying to selling, right? CVD was green. So gold was also in demand at the time, so we figured today was a good day to go up. We went long on the retest of R4 for a big breakout, and this is the ATR high. Ran this one almost all the way to ATR on this one. Now, this was a gold trade on micro gold futures, and I actually went a little heavy on this one. So this was a really nice trade. I made about 2,500 on this trade. So one in, one out. Very simple day trading, right? So another trade that I took here, you can see this is a trade I took on micro crude. For those of you who enjoy moves that happen after hours, a lot of our commodities move very, very well in the pre-market, but they also move really well during the open market. So you can see here we had a really lovely kind of bounce here. I went long, but I actually cut it because for the same reason I did on my other trade. My positioning was a little wide. So when it came back, I went ahead and cut it, and then when it reoffered, I got long with a better stop, and that let me hit a target a little bit faster. So I have maybe about 5 minutes or so, 10 minutes left in the day, and I thought I would leave that open for some Q&A if anyone is so inclined, and then and that will be it. I think Bruce said he could like read some stuff to me or something like that.
Sure. No.
Oh yeah, I think I could pop. Oh, I was able to pop open the chat actually. I just figured it out.
Okay.
So I got a chat now. So anyone, if you have any questions or anything you'd like to talk about, I can see IMCS and I can see Trader, which is kind of a really dope name. So Justin in there and everybody. How did you select Apple before the open? So Apple came to me because of an alert, right? So I have my system. My trading system, and it's actually like sets alerts. So you can see here, right? You can see that there's an alert right there where it says alert on micro gold, right? So I got onto Apple because I was waiting for a ticker at the open. I was actually watching Nvidia and it just exploded, and then I got an alert on Apple. So that's what actually drew my attention to that particular ticker. After that, it was just following the system, right? It opened, and where it opened, there's only one play option I have for that play in the book fit. Yeah. Nvidia trader was like, wow, like, oh my gosh. Watching the Qs today too, right? Like, I mean, just the way everything was it was just ripping today. And ahead of FOMC, like seeing that much volume coming in ahead of FOMC, and it's just like, it was just crazy. I did not have an expectation of that, but we were back at the open price by FOMC. So it was really interesting. So how do you recognize institutional orders easily? So institutional orders are almost always going to be large block orders. They tend to come in sets of 3, and they hover around large numbers. They like the even ones. They call them the spot numbers, right? So you're talking about like $100.25, or if you're on the market, they say 100 spot 25, right? 100 spot 50, 100 spot 75, and 101. right? So this is how they generically do that. So you can see the institutional blocks, because only institutions are really going to have enough volume to set and actually have an interest of setting large orders out there in that sell area. So trade the volume. My apologies. I do not know how to trade delta divergences. That sounds very options related to me. And I don't trade options. But now if you're, but I have, there's a lot of material out there, but not material that I got. That's for sure. Let's see here. Cool. All right. So you use passive order blocks as targets. Is there situations where you would front run them as entries? Yeah, I don't do it very often, Shark. But I do think so like, for instance, there are certain areas in which, right? So like, let's say if I'm in a higher, wider range, right? Let's say I'm playing futures or Qs or SPY or Apple or something. If I'm in a higher, wider range and my ATR is fairly close to R4, which would be the high end of my range in this instance, I would not be opposed to actually, setting a limit ahead if there was a large order block sitting up there, because I already have no expectation that we're going to go outside of range, right, with the wide range. And then having the flagging institutional orders on either side kind of supports the concept that we would be range bound, right? So I definitely don't go against the idea, although I don't do it by practice. I certainly don't go against it as a general idea as far as doing that. I think it could be quite beneficial, but I think algorithmically it could be pulled off very well. Great. Oh, my pleasure, Lex. I'm glad you're enjoying the session, my friend. Is this also the setup algos at the CME futures? No more pits. Right. So JJ Marks. So right now almost all of our markets do not have what we call specialists anymore, right? They're almost all algos now. Like even the Nasdaq, right, is completely algo driven, right? So the NYSE is really the only floor that stays active, and I really think that's more about the options floor, right? So at the NYSE also has the options floor, and the options floor is what we call an open outcry market. Right, so if you go to the NYSE now, the NYSE is not an open outcry, right? And so what is open outcry? I need Apple, $300 and 2 shares, anyone got it, right? You can't do that on the NYSE anymore, right? Everyone just go like, who's this weird guy? Like, he watched too many movies, right? You can't do that, right? The only way to get orders in, even for the specialists, is just to do it. There's no more of that insider stuff, but that's not true for the options market. Right, the NYSE options floor is still open outcry. Those guys are I think one of the reasons we still have specialists on the NYSE is because they can hear when the options floor comes in, and they can make decisions with their experience a little bit outside of what just an algorithm could do. Do you use any equities instruments that are inverse to find trades? Like you mean like inverse leverage ones like SPXL or SPXS or something like that, Justin? I don't have any issue with using them. I actually, not for nothing, I really find using the inverse ones kind of enjoyable, because I'm what you call a perma bear, right? I only like shorting. I really hate going long in the market, right? So you could use like NVDL, for instance, Justin, right? Would be a way you could, which would be a leveraged NVIDIA, but there's also an inverse version of that as well, which I just forgot to like NVDX or something like that. NVDS, I don't remember its ticker. I don't use them. I'm actually primarily a futures trader, so the vast majority of my trading comes from trading futures, market level and commodities futures. Great presentations. Where can we find more educational content? Taylor, thank you so much. I am a moderator and educator at the Bearable Traders community. I'm also the senior futures trader at Peak Capital. So we do boot camps to help teach traders and help them learn their playbooks and all those things. So if you're interested, you can always shoot me an email, thor@bearbulltraders.com. I can send you information or any of that kind of stuff. I'm always happy to help y'all. I'm always happy to come by these Bookmap sessions because it's always a really good opportunity to hang out and talk this stuff. So as far as the limited entry, so 4 floor pivot levels, then maybe. Yeah, exactly, Shark. Yeah, exactly. Are your Bookmap settings, Thor mode, available for download? I don't have Bookmap settings that are available for download, but if you send me an email, I'll give you a screenshot of what I have. That should be perfectly fine. Let's see, got a few people still typing. My pleasure. Setup on TradingView, Lovebreed, is quite easy. So if you're in TradingView, you just go into the indicator and type Camarilla Pivot Plays. All right, they're by BruzzX, and he's who coded them for me. But it's the easiest way to spot them is just to do that. Let these couple of typers keep going. Thanks, appreciate you. Trading is life. I appreciate you, man. Thank you. All right, everybody. Well, I appreciate everybody. We're going to go ahead and conclude this session. I look forward to the next time I can come hang out with you. I really appreciate your time and your attention and coming and hanging out with me on, what is it, like 3 o'clock on a Wednesday, right? So much love to everybody and look forward to seeing you out there. Find me on social media and say hi. As always, keep it green, people, and I'll talk to you later.